Perfect. So the multifamily finesse, the multifamily flip is why we did this tonight. So a couple weeks ago, we did a 3-part series on underwriting with Jose and Justin Brito. Now we're talking about flipping multi. So kind of just a quick background, like there's still people logging in. We had a big sign up this week for this event. So as people log in, it's kind of like, why are we doing these multifamily master classes, right? So as we all know, I'm sure Sophia will cover it. Over the last few years, especially since COVID, we kind of, us mom and pop investors, duplex, triplex, fourplex, fiveplex, 10 units, we kind of got beat up, right? The big hedge funds, the big funds came into town. They're buying on 1 caps, 2 caps, 3 caps, whatever it is, just stuff that we can't take on. So we kind of got kicked out of the game in all levels, not even multifamily, even in the single family, the hedge funds were beating us out. Even just the regular first-time FHA home buyers couldn't buy either. So we kind of got roughed up a little bit. So how do we stay in the game? That's one of the reasons why we have Sophia here. Sophia reminds me of someone I met a few years ago. This was like 2017. I met a gentleman from Newport Beach. So he would fly into Phoenix, and he was just flipping multifamily properties of all sizes. He was assigning them. He was taking them down. He was renovating them. He was just making big checks, flipping multi. So I got to know him through the Azreia meetings and just around town, and just got to know him, right? So he was very well known. So very successful guy. I think his name was Taylor. And one day he just disappeared. So, and I didn't see him anymore. So I don't know what happened to Taylor at that time. But then about 2 years ago, I went to and saw Sophia present. I think it was at Venue 8600 with Augie. It was a while ago.
Oh,
right? Yeah, right. So, and then you started talking about what you do and how you flip multifamily. And I was just kind of like, it reminded me of the guy Tyler, right? I was amazed by him. I was in awe because I was doing single families, mobile homes, and it just seemed multifamily just seemed so big and outlandish, like I couldn't touch it. So I always wanted to know what he did, but he disappeared. Then I saw your presentation, it reminded me of him.
Oh.
So a few years, so when he disappeared, I decided to call him and got a hold of him, and I was like, "Hey, man, where you been? I don't see you around anymore." He's like, "Oh, I'm out of there. I left Phoenix a while ago." I'm like, "Oh, why'd you leave Phoenix?" He's like, "Well, I'm in Houston." I was like, "Okay." He's like, "I'm just doing the same thing I did in Phoenix." He's like, "Phoenix is done. I'm done with Phoenix. I came in, did what I had to do, and now I'm in Phoenix. And here's what I do, Mike. I look for the cities, the up and coming cities." So while I was flipping in Phoenix, I was looking for the next city that's going to be the next Phoenix. So I got what I got to get, got my money. Now I'm in Houston doing the same thing. And then while I'm in Houston, I'm looking for the next city. And I remember in Sophia's presentation, you mentioned this all the time. I'm sure you will tonight. Every market has their seasons. And I just was like,
patterns. Yes.
I found the next Taylor. Okay, I'm not missing out and letting Sophia disappear this time. So I'm going to keep in touch with her, and I'm going to figure out what she does, and I'm going to have her show everybody at Azreia. So that's why we're here with Sophia today. So that's why we're here. So I would appreciate you just bring Sophia. Jose, I'll let you take over. That's why she's here. Hopefully you guys enjoyed the presentation. I'm excited to watch. So Jose, you good to go?
I am. Thanks, Mike.
All right. Thanks, everybody.
So hi, everyone. So my name is Jose Miller. And for those of you that don't know, I'm the lead for the multifamily subgroup in Azreia. And today we'll be talking with Sophia Wiltz a little bit, and she's going to be showing you some of the things that she's been doing and some of the progress that she's made in multifamily. So it's going to be pretty interesting. So real quick, I just want to introduce myself. Again, I am Jose. I'm the lead for the Azreia multifamily subgroup. I am a Purdue University graduate in aerospace engineering. I actually still have a W-2. I like to tell people, not that I'm an engineer, but most of you, because that you'll probably figure out, but I like to tell people that I have a W-2 because everything I'm doing on the side, if you will. So this is something that you can do. I started buying rental properties in 2011, with single family homes. Since then, I've tried flipping land. I say tried. I've done flipping land. I've bought notes. I've done door knocking, and now I'm sort of moving into midterm rentals. I bought my first multifamily in 2021, where I self-manage. I self-manage that along with the other properties that I have, and since then, I've partnered in a variety of assets in Arizona, Atlanta, Houston. Right now, I'm focusing on a couple of different things. I'm focusing on acquiring assets in the greater Phoenix area. As I think a lot of people are realizing, Phoenix, there's a lot of people coming into Phoenix, a lot of investors, and they are Sophia's going to talk a little bit about why some people, actually investors, are moving out of Phoenix. I'm still looking though in Prescott, Payson. I like those sort of secondary markets, tertiary markets, if you will. And then fun fact about me, I used to play ultimate frisbee for about 30 years. It's like frisbee football, and I competed at the national and international levels. So our guest today, or Sophia, is going to be actually doing our presentation, probably about an hour or so, give or take. We're going to hold all questions and let her finish her presentation because she has a lot of good information that is best if you just hear the whole thing at once. And what we'll do then after that is I'll take questions so that via the chat, I'll be able to answer a lot of questions that you have, questions that are specific to what Sophia is talking about that I'm not able to answer about particular deals. We're going to hold those questions till the end and compile them, and then she's going to go over everything. But a little bit about Sophia. So Sophia started as a realtor in multifamily. She realized that that's what she wanted to do because she was able to close her first deal within 10 days of becoming a multifamily realtor. In her first year, she closed 24 multifamily properties. And lately, she's actually made, let's see. So in that first, I think it's her first couple deals is when she made over $550,000 in profit in less than 3 months. Okay. Since then, she's been regularly and consistently at the top of the 1% of the Phoenix small apartment brokers for the last 11 years. She's founded Grace CRE with her husband, which is the first faith-based investment brokerage there in Arizona and Florida. She has worked extensively as a broker and an investor of multifamily assets. She's currently specializing in acquisition and disposition of multifamily assets, and she's also specializes in finding off-market deals, and hopefully she's going to talk a little bit about that today. And Sophia is a native of Phoenix, Arizona. So with that being said, I'd like to pass everything over to Sophia. Hopefully I got all of that correct.
I think you did.
Misrepresent you in any way, shape, or form.
No, you did great. Thank you.
Great. So Sophia.
All right. Do I jump on now?
Yep, go for it.
All right. So I guess I'm going to share my screen.
Mm-hmm.
All right. So here we go. All right. So I think I'm doing this correctly. All right. Hi, everyone. Super excited to be here, especially with Azreia. When I very first got my real estate license, I actually went to an Azreia meetup. And I think it was like in early 2013. So it was really cool to see what an incredible group they had created and people to actually have a higher standard and not just putting people in bad situations. So I was very attracted to that. And for me, like partnering with Azreia, I felt extremely honored because my biggest goal is to help and serve the community and make sure that people know how to protect themselves in these type of deals. A lot of people are not necessarily should be in the multifamily market, and some people, like not knowing the basic foundations, you can potentially harm yourselves or you put money in the wrong deals. But that was kind of my biggest reason why I wanted to partner with another company such as Azreia, because they're a national trade association. They have a higher standard. I have a higher standard. So I think it was just a really good fit. But my biggest why tonight is I want to help you guys, whether you've done a deal or not. But I know that we're going to wait for questions. So I'm going to have you guys just write in the chat real quick. Anybody that's on this Zoom call tonight, if anybody has a multifamily deal, just please enter it in the yes, I have one. How many units is it and what state is it in? And then also in the chat, I would like you guys to let me also know are you guys actually ready to get into your first multifamily deal. And I would definitely love to help answer those questions towards the end. But my biggest goal tonight is to make this super easy, where you guys can actually secure your first off-market deal with or without a broker. On or off market, both great opportunities, but that's what we're going to be going over tonight. And okay, so this is my little family. I didn't have like a very great fresh start getting into real estate, but it's okay. We learn from these lessons. So again, my name is Sophia Willits. I'm my wife and a mother. I have 3 beautiful kids. That's my husband, Joshua. He is our designated broker of Grace CRE. And like many of you, I've started with pretty much little to no money. So I was actually raised by a multifamily investor, which is kind of funny, but my dad is from Austria. He came to our country back in when he turned 21, and he was a World War II baby. So he was born in 44. So he had a very different upbringing. So when he came to America and he saved up to be here, he couldn't speak English. He learned how to work on cars, but that can only be for a season, because our bodies back in the day, you do an engine overhaul, your back would break. So my dad did that for 10 years. He ended up buying his own car lot, but at 36 years old, he sold his own car lot and bought apartments. Now, I didn't realize that apartments was going to be my life. You know, I hated these apartments when I was growing up. The apartments were pretty ghetto. I didn't like that. You know, like my dad would go down there. He would go dumpster diving. He like painted them themselves. We had swamp coolers. They were terrible units. And when I was raised by my parents, I actually thought I was really poor. So my dad was just very frugal. And he made like somehow like he found $1, he'd like make out 2 out of it. I just didn't understand it. But I watched the cycles of the marketplace from the early 80s all the way up until like the 2000s. So I didn't know I was actually learning from my dad as he was, you know, generating income for our family that way. So for me, like I had a lot of different jobs. I started working when I was 14. I started selling candy door to door, had lots of different jobs. And I started working at a very young age because my parents wouldn't give me anything. So I had to really work hard for it. So when I was 19, I was really successful at a little camera store. I was I was the best salesperson there. And I bought my first home. But I kind of did a hack. And I know like a lot of people at Azreia also do like the pad split. So that's kind of similar to what I did, but I actually lived there. I even rented out my laundry room. So but back in the day, like when I was 20, I'm in my 40s now. So like, you know, you could buy a house for $133,000. Like that was great, right? And it's kind of hard to get those deals now, but like during that time, I was only making like $33,000. So my mortgage was $700. I thought $700 back in the day was a lot, you know, but then I rented out each room, and each room I rented out for like $400, $500. I even rented out my laundry room for $200, but I was at least cash flowing. Then I got a really good job at Lazy Boy. I got really excited. I started doing sales there, and my first commission check was $7,000. So now I'm like in my early 20s, and I thought I was like a big baller. And I was like, you know what? I'm going to be like my dad. I'm going to go out and invest. And everyone at my office was actually buying real estate with really bad debt. You know, I don't know if you guys heard of Countrywide just giving out loans. You didn't even have to prove any type of income. And I thought I was going to make all this money because the real estate in 04, 05, 06 was like really going up. But my dad was actually paying attention right now to this pattern. My dad tried to warn me, and he's like, Sophia, this is now. He owned them in the 80s, these apartments. And he bought them for like, you know, $7,000 to $10,000 a unit. And now he's trading them for $75,000 a unit, you know, a little over 20 years later. And he cash flowed them for a very long time. But he's like, don't buy anything. I think you're going to lose it all. I'm like, oh, Papa, you don't know what you're talking about. So he was right. He sold his apartments. And then I pretty much lost it all in 07. Every time I made a payment on the properties, I would owe more. And then I don't know if you guys realize this, but like in 2007, our rents were not covering like the interest rates. So at this time, were in the 7 to 8% interest rates in like 07, 06, 05. Like they were like ticking up there, right? But like they were like reverse, like where like they add on more every time you made a payment. And then like our rents were really never near what they are now. So I pretty much was $1 million of debt at 24. I lost all my properties. I had 3 foreclosures. I had to give up my cars and pretty much start over. I got a loan mod on my house. And like I lost my job because nobody was buying furniture anymore for all these houses that people couldn't stay in. So it was really a humbling experience in my early 20s of being a wannabe investor. And so like I worked really hard. I ended up getting married to my first husband and I had Chelsea and Cooper, which are the 2 older kids in this photo. And I just started doing hair and I was like, I'm going to be a part-time working mom. My ex-husband's working at Discount Tire. We're just going to live like a pretty mediocre life. Like I would cry if I lost $20. Like we were so freaking broke. We were putting groceries on credit cards. Like we lived that way for like 5 years. And then once I had my son Cooper, now I have a 2-year-old and a 5-month-old. I have $340 to my name, like for my entire savings for like the rest of my life. And I'm looking down at my pay stubs with like doing hair. And I'm like, I need to get out of this. How am I going to get out of this? And I've always loved real estate. And I saw my dad win, but I'm like, I want to do it different this time. So what I did was I got my real estate license. And I went home and I told my ex-husband at the time, he was my current one, I said, hey, I want to get into real estate. And he's like, it's not the right time. I said, you know what? It's never going to be the right time. So what we did was I pulled out a loan out of our 401k because if you go into real estate, a lot of times, like, and I didn't really have a job to support our family. If I'm like going all in on real estate, you need like 6 months of reserves. So I made sure that we pulled out like about 14,000 in reserves to be able to get my real estate license. And it was hard because like I never put my kids in daycare before. So I couldn't even afford regular daycare. So I put my kids in a home daycare off of Craigslist and I paid like $25 a day. I felt like the biggest POS mom in the world. So every second of the day that my kids were in daycare, like I knew like I had to make money. It was like a fire in me. I was like, I can't have my kids staying there. I have to make this work. So my very first 10 days of getting my real estate license, I'm interviewing all these different brokers, right? And I thought I was going to sell pretty little houses, but there was one broker that actually stuck out to me. He sent me a letter and he said like, hey, you should come check out our brokerage. But the funny thing is, I don't know if you guys remember this. I said I had a lot of jobs. I actually worked for him. And on my way to another interview, I talked to him. I found him in the parking lot. I'm like, hey, Steve, I'm here for an interview. And he interviewed me on the spot. And he saw me. He's like, you look familiar. And I'm like, yes. I'm like, but you fired me. I was a terrible receptionist, but I'm a very good salesperson. So I hung my license with him. Now, I thought, guys, I was going to sell beautiful little houses. But I saw an opportunity because I could sell multifamily, I could sell office, hotel, retail, industrial. I was like, okay, ding, 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 that's more recession proof. Because if I'm only in one particular niche, and if a niche changes and cycles, like I don't want to be starving again. I've already been starving for 5 years. Like I got to get out of this cycle. So I hung my license with him. I made my first transaction happen in the first 10 days, like Jose said. And then I sold 24 buildings my first year, and I was able to pretty much retire my ex-husband in the first year of doing real estate. So for me, like I'm telling you guys, if you do things just a little bit differently, your life can change very quickly. And I'm going to click the button right here. All right. So going through apartments, I don't know if you guys have tried to get into apartments. I don't know how to minimize this little part. Okay. Does that work? Can you guys still see me? Oh, here we go. Okay.
Yes, we see you.
Okay, perfect. I'm like, I'm going to just minimize that so I don't see myself. All
You're
right.
good.
So, okay. All right. So the reason why I created Learning Apartments. Now, a lot of people, whether you guys have experience or not, most institutional brokers keep all their listings in-house. So that means that the most amazing opportunities, they're going to go to the best buyers that they already have cherry picked, or they're going to buy it themselves. So my biggest thing is like, I want to create something for everyone, because for me, I've done over 1,000 transactions in the past decade. And like, I found all these amazing ways to get these off-market opportunities. And a lot of people, like when they talk to brokers, they don't get the time of day, or they don't know how to protect themselves when they're going in a one-sided transaction. So something you guys need to know, guys, is when you're going into multifamily, and especially if you're getting into like 5 units and above, and you're dealing with an institutional broker, they only represent one side. They're not NAR members. NAR members are the National Association of Realtors. I know a lot of them have bad raps right now, but the reason why that institutional brokers do not want to be part of the National Association of Realtors is because they don't want to co-broke, and they want to be able to keep both sides of the transaction. So that means they'll only represent one side. They don't even do dual agency. They'll typically have an attorney draft up a contract, and it's going to be a one-sided agreement. So it's going to basically be buyer beware. So if you don't know how to protect yourself in these deals, you can lose really big time. So one of the biggest things is like, are you guys ready for the biggest transfer of wealth that's happening in the next 6 to 24 months? And the reason why I'm saying that is because we're going through a cycle right now. So there's a lot of distressed real estate and notes coming due. And what I'm saying is it's going to be an amazing buying opportunity. So what's going on is in the Arizona market, if you had bought in the last 4 years and you did the 18 to 36 short-term bridge note debt, or you had a floating rate, and or say like if you bought in 2019 to 2020 and you're trying to refinance now, and you've actually are not able to because our interest rates are so high, our rents have dropped, and our vacancy has risen. And so what that means is the people that got the short-term debt, I would say about 60% of everyone who bought these larger transactions in Arizona are probably going to lose their building this year. So like I'm going to go over some little bit of greater detail. And like, I'm even telling people you shouldn't even necessarily even reach out to the sellers now, because they're going to lose the asset anyway. Some of them are like so incredibly upside down. There's no way for them to even pull themselves out. So like, I feel this is such an incredible buying opportunity for you guys if you guys are wanting to get into these distressed notes right now. So how can you find these same deals? Let's go over that. So I know you guys probably know the power of networking. Okay. I actually got this deal. This is my very first deal. Now, I want to also go over this with you guys. I have given away over $1 billion worth of equity in these apartments. I was a person that was working their little tail off, giving away all my deals to these investors that would come out of California, Washington, Oregon, all these states. And I would just, get my 2 to 3% fees. Sometimes I would double end the deal where I get 5 to 6%. And I was making money. I was, selling 80 to 100 transactions a year. And, I was making several $100,000 making commissions. It was great. But I had an investor that asked me to teach a multifamily class. And when I was teaching this multifamily class, I was brought this off-market opportunity that you see here. It was a little 7-plex. And I was like, oh, I have a buyer for this. Like a wholesaler brought it to me. Another wholesaler brought it to me. And nobody had it actually under contract. And so I actually went direct to the seller. And the seller happened to be a HomeSmart broker. And the HomeSmart broker said, yeah, I've been under contract a couple different times. Like they couldn't perform. And I said, I'll buy it. And it was the first time where I was like, when is it going to be my turn? Why am I giving away several $100 million worth of real estate and just playing the sales agent? When is it going to change for me? So what I did was I actually bought this building in my self-directed pension plan. I bought it with $90,000 down. And I bought it for $705. I did 0 rehab, guys. My holding cost was $15,000. All in was $720. So again, guys, I put the 90% down. I did the 10% interest, and I did actually a hard money note, so it was like a private note on financing. And what I did was I just took pictures of it and I sold it, and I made a $381,000 profit in just 6 weeks on this one. So this is also another deal that I did. This one I actually bought on market. I bought it with one of my sales agents. So I bought this particular deal in Scottsdale. It was a little fourplex. I like little fourplex because they're easy. They're easy to trade with financing. This is the before. This is the after. We bought it for $905. We did a rehab of $275. Our holding cost was $25,000. Our all-in was $1.205. And then this one, we were able to sell for $2.3 million in 4 days, all cash for $1,072,000 profit. And then we only held it for 6 months, which I thought was like amazing. This was like my best flip that I ever did on just little 4 doors. Like, could you guys imagine picking up a fourplex and making over $1 million? I'm telling you, it's possible. And I did it right here in Scottsdale. And guys, pretty sells. Here's another example. So this particular building, I was a listing agent for. I typically send out 7,000 pieces of mail a month and asking people to sell their buildings. So I'll either pick up a property or I'll list it. So I listed it for the seller. We were under contract twice on this one. The first buyer fell out because they didn't qualify for financing. The second buyer fell out because it needed so much work. Like, we gutted the units, we had to rip out the foundations, replace all the plumbing, renovate the insides. It was a lot of work with this one. And honestly, guys, the units were rented for $400 to $450, and this is in 22. Okay, this is in 2022. So I went direct mail. I got frustrated with the last buyers that were in escrow, and they had the inspections. I'm like, you know what? I need more buildings to buy. I'll just buy it for my course. I need more buildings to actually film and flip. So that's exactly what I did. The holding cost was $194,000. The rehab, guys, was almost $1 million on this, and this is just 12 doors. So I'm in this building now, $4,149,000. So this one I made in 10 months of 1.385 million net profit. And then I also got 210,000 back on top of that for my commissions. So like, I'm telling you guys, like, being a broker has so many advantages, because like a lot of people are like, oh, I don't want to have my license. Well, I'm telling you to get your license, because you guys can be able to use your tools and strategies and also be able to create this type of wealth for yourselves and not just give all your deals away to investors. Like, you have to start somewhere, especially if you have no money. Starting to learn how to get into the multifamily game, especially as like a sales agent. And then you can actually learn along with your investors that you're watching them invest into other deals. You can even throw your money on deals and be part of a spread. I mean, like, I partnered with my last agent. We both split, almost 600,000 each. It was amazing. So like, for me, like, I like to teach, especially at our brokerage, we want our agents not just being salespeople. Like, doing sales is great, but like, I'd rather partner and do deals with you versus like giving all your deals away, like, especially on stuff like this. So these are really good examples that I wanted to bring up to you guys. Let's see. Okay. So I want to kind of go over this right here. Let's see. So let's talk about markets real quick. So have you guys ever heard of CoStar? CoStar is basically like the commercial MLS. You do not have to be licensed to be able to use this. But if you're wanting to pick a particular market, it can be very helpful. Now, I'm going to go over different markets right now because I think it's important. Now, every market's going to have its season. In Arizona right now, obviously, since June of 22, our sales we've only had about 295 trades since June of 22. So that means that in Arizona right now, we're down almost 90% in multifamily sales. Now, our building values have dropped anywhere from 25 to, I would say, about 55% in value. And so now you can't, like, some of those examples that I was showing you guys, I can't do that right now in this market. So like I took that 90,000, I grew it to 6 million in 2.5 years by flipping 18 different buildings here in Arizona, but it was for a season. So if you understand the seasons and patterns, because when I say Arizona only has 295 trades since June of 22, there's a number one reason why. In spring of 22, we had 5 rate increases and pretty much like we lost all our financing. Now, Arizona is a credit sensitive market. So the 295 trades that just happened since June of 22 were 75% of them were bought on credit. If you go to another market that I'm in, such as Florida, 75% of all their transactions are purchased with cash. So when our interest rates go up, Arizona goes like this. That's the problem. So now we're not transacting, we're not able to trade these buildings because our vacancy has risen anywhere from 10 to 23%. We used to be at a 6 to 10% vacancy. And something to keep in mind, guys, too, is if you are doing over 5 units and you're trying to get into commercial, if you have over a 20% vacancy, the building is no longer financeable by a regular lender. So you'd have to get a hard money loan, which could be putting you definitely at a bigger risk. I'm okay to buy these small apartments with like a hard money note to be able to do rehab. But like these other ones that are much larger, you pretty much could almost guarantee you might lose the building. So buying on certain terms and debt is something that's going to be really important for you guys. But let me go over the marketing side when it comes to like choosing your market. And here, I'm going to show you. I'm going to move this over a little bit. All right. So what's really cool is this pulls up like all the US. I can also pull up Canada and other markets as well. But you can see like what market do I want to be in, right? Is it Arizona? Is it somewhere else? You can see like New York, for example, right here it says like, hey, its average sales price per unit is $661. It goes over the trade sales volume right there, which is like they're definitely down in sales. The asking rent in Upper Side New York is $51.51 a month. So let's just go ahead and look up at Arizona real quick. So this will generally give you guys a really good snapshot of like, hey, what are these actual units actually trading for? So let's go ahead and pull up Tempe. I love Tempe. I made so much money here in Tempe. So right here, so we're still a pretty low cap, guys. Now, a year ago, we're definitely like a lot less. I mean, I was trading buildings at 2 to 3 caps. We can't trade that anymore. Our interest rate is no longer at 2 or 3% or 4. We're like, you know, in the larger loan debts, like, you know, like you're in the high 6s and 7s, depending if you're like flexing. Like some of these notes are like, will actually follow the index, so they can go up or down depending on what's going on with the Libra rate for the day. So it really just depends. But like for Tempe though, the vacancy has risen. So like this, like a while ago, like 2 years ago, guys, we're like at 6-7% there. So like it's still rising up. And then if you look at this number right here, you can see like how the rents are starting to drop. So like if you guys are like getting into multifamily, CoStar is such a great tool and resource to like basically verify your data. Let's go over like Scottsdale real quick. Scottsdale has been like one of my best flip markets over there. All right, so this number, like this one obviously dropped a lot. But guys, I was selling units for $575,000 a unit, $453,000 a unit per unit. I'm talking 2 bedrooms. That makes no sense at all. But there was a season here for it, and we were getting it. We were actually getting that those actually traded. And if you notice again, like the cap rates are going up, and if the cap rate goes up, the price must come down. Okay, that's like a pretty standard rule of thumb right there. And again, the rents are definitely dropping in Scottsdale. Like we used to be able to rent the units for like $2,200, $2,000. We're nowhere near getting those prices. The vacancy in Scottsdale has dropped a little bit. So like normally the other markets have gone up. some of the downtown Phoenix markets are still like in the high 23% range, but this will generally give you like a pretty good idea. So you can also pull up like the Tucson markets, basically any of the markets that are right here. So let's go to, so Gilbert is more like the new construction. Those are like for like the 300, 400 plus units. We can do the East Valley. Same thing, the rents are dropping, the vacancies going up. So like if you guys want to like look at CoStar every month for like this type of data, it can be super helpful depending on what market you want to be in. Now, the price per unit keeps on dropping though. That's a problem. So if you're looking to like buy and hold in Arizona, you can definitely buy and hold. But if you get leverage right now, you're going to have to probably put closer to like 50% down to be able to cash flow because our interest rates are so high. So then what do you do? So what I tell everyone is you can create the same opportunities in other markets that are thriving. So let's go ahead and go over to the Florida market. So we recently opened up our office over in Florida, and I've been, I'm a diehard Arizona fan because I've been here my whole life. But I was like, I want to continue making sales. I want to continue flipping because making quick money really quickly can be very addicting, obviously. So let me go over the Florida market with you guys real quick. So guys, like, I know like this is like kind of a quick like little snapshot that you can see. All right, guys, look at the rent compared to Scottsdale. We're talking $22,745 versus Scottsdale. It's like almost $1,000 less per month. Okay. And then if they're renovated, you can get $363,000 a unit. That's really good because right now in Florida, I'm picking up buildings for either 160 to a little over 200 range. And then I can add either a little bit of money or a lot of money and make $100,000 per unit spread in Florida. And my rent is like pretty much like so much higher. So now it's going to cover the higher insurance and the tax costs, and people are buying their cash. So our 290 trades was all of Arizona. Just in Fort Lauderdale, which is like a very like the size of Maricopa, there was 1,100 trades. There was close to like 15,000 trades in just the past 2 years there, and all done with cash. So people are going over there and literally just buying it up, and like they're going fast. So people now, I can actually get returns from my out-of-state investors now, actually going on in Florida. So I actually flew from Florida this morning. I was out there, I was driving around for 16 hours yesterday, selling some properties, but like now we're making like potential several hundred to $1 million spreads again, like I used to here in the Arizona market. So if you guys notice, like once you guys like see the cycles and the trends of like what's actually possible, you guys can identify like the things that I've done here and then just take it to a new market. So I wanted to give you guys a couple examples, like for like this one. You can also pick up really good opportunities with agents that don't know how to list properties. I bought this property because she listed it for her dad, but she actually listed it as a house. So what I did was I bought it, represented myself with this one in Tempe here. I put some paint on it. I think I put like, I don't know, 15 or 20,000 into it. And I made like it made about $175,000 spread for pretty much like within a month of buying this asset. Like this was like 60 days in and out. So like picking up properties, here's another example, same thing. I bought this property out in Tempe. I did nothing to this one, absolutely zero. They listed it as a house. And this one, I think I made close to 200,000 spread on that. So like, this type of stuff like is possible in Arizona or like the Florida market. There's a lot of people that don't know how to list properties correctly. I like to take advantage of those opportunities for sure. But you know, a lot of people are like, hey, you need big doors, more better. Well, yes and no. When you guys are just getting started, I think getting in like the 2 to 4 unit range and then growing your portfolio and building out an incredible empire for you guys to get out of jobs and basically like have potentially just be a full-time real estate investor or a real estate investor that's also an agent could really change your guys' lives. And I'm telling you, like, I could barely pass high school, you know, but like I see patterns, right? And if you have the ability to recognize patterns and you can see a certain season changing, you guys can capitalize on that in pretty much any market and any place. So it really just depends on what you guys are wanting to do. Now I'm going to go over an opportunity that I found an off-market opportunity. We have 21 it's a 21 portfolio owner. He wants to get rid of all his property. So I've been kind of like going in and, you know, like finding these off-market opportunities because I just built a relationship with a broker. So he sent me a 21 portfolio of all these properties. So I'm going to show you the property I'm picking up right now. Pull that up. Second. Hopefully I'll get my contract. Like I feel like we'll probably be in this deal like maybe 60 days. We're not really doing anything to the property. All right, guys. So this is a off-market little deal. Look how close you are to the beach. This is just a little triplex. I'm gonna pull it up on Google Maps for you guys. So I flew out with another investor that also is one of my agents. So we're gonna go buy this deal together. There's like $4 to $8 million homes in this particular neighborhood. It's in downtown Delray. I started learning this market really quickly because I went down to CoStar and I'm like, okay, so the average trade, if I can pick it up for like 200 to 225 a door, and then I also run my comps for this particular property, which I'm going to show you guys how to do that. Okay, so I pull up this market. I'm like, okay, great. So the average trading price right now is $380,000 a unit. Great. Now I have like the average rent is also $2,713. So like I identifying like these deals that I'm seeing, and also I'm going to show you guys like, hey, like why we came up with like the price that we're buying this particular building for. So I'm able to get this deal off market right now for $650. Okay, so we're going to be in about $216 a door. My partner's buying it with cash, and I'll show you where our exit's going to be. So I'm kind of giving you guys some real life training real quick, just so you have an idea. And guys, like, am I doing any underwriting? No, I'm not. I'm just like, what can I trade it for? Where can I rent it at? How much do I need to add to this particular property? Just something really quick. And like, guys, it doesn't take that long to identify really good deals. Especially if you guys take advantage of our interactive training system. So right here, we have a lot of comps that are pending right now. So like a duplex that's in the same subdivision, that's just a duplex. That's trading for $760. So this particular building right now, so if you take $760, like this is just simple math, because like I'm going to sell it to another consumer that's going to potentially either buy it cash as well, or they'll buy it with a regular loan. So again, that's a $380 a door. So if I'm able to trade this at $380 a door, that's $1.140. And I'm buying it for $650 right now. And like, this is like obviously an ugly apartment building. Okay. Like taking advantage of like relationships, building these relationships with brokers. And then let me show you how I actually got that deal. So I'm selling the other property that the property manager showed that I'm selling to my investor. And I was like basically like first in line on this particular property. And so I told him like, hey, like I really my buyer's in a 1031 exchange. And I went under contract on this building. And then he showed me 21 more buildings because I opened that Pandora's box, guys. Because you want to know why he hasn't listed 21 buildings? He doesn't have time. He's a property manager. Guys, don't list your properties with a property manager. Like, I love this guy for giving me all these off-market opportunities because I'm going to make a lot of money. But if you don't like advertise these properties for the seller, like I'm able to like undercut and get really good discounts on properties. Like he doesn't do this like full-time like I do. Like he's just selling it, you know, like he has them rented super low. They're all like rented out like $1,000 below market. And, you know, like he's using some really ugly comps. But like I know what the actual value is because I've done my market research, I've done my due diligence, and I know what I can trade it for and I know what I can exit it for. So like for these little opportunities, I feel like are really incredible that are going on right here in Florida. All right, and I'm gonna finish up my little presentation real quick. Oh, sorry. This is also another flip that I'm doing. This one I'm doing in Scottsdale. It's actually a home. I bought it in my self-directed pension plan. I bought it with multifamily money. I'm taking this money and then flipping it over to Florida. So this one I got off the MLS, but I got really creative with the seller and the listing agent. I actually wrapped the existing note. I did a $250,000 rehab. My all-in cost on this one, and this is like on the market right now. I don't have any offers yet, but I think it's been on the market for a little over 3 weeks. So all in right now, we're at 1.49. And I only put 100,000 down on this house, guys. And I wrapped the existing note at 5%. And I got an additional $30,000 credit at close. So this one is a potential $445,000 profit. If you guys are in single family right now, I would definitely recommend buying more like the higher scale because people are actually buying out of state. So Arizona is really good for a second home. If you're in like the low tier, like 5s, 6s, and 7s, those are having a really hard time moving out here. But when you're in like the high, like 1.8s to like a little 2.5, those are actually trading right now. So guys, I have an offer for you. I created Learning Apartments, so it's like an interactive training system. I want to teach you guys how to find the most profitable deals on your property, killer strategies and closing negotiations that will give you the best deal every time. I'm a very good negotiator. You guys can always hire me as your broker too, because like I love to get the best opportunities and deals on properties. I love how to flip apartments. Like my average returns are 300 to 500%, and how to protect yourself so you never lose money again, and how to actually analyze a deal correctly every time. Right now we have a pre-launch offer. You will get our essentials program. So that will give you the basics on how to like start by getting your license, how to find on or off market deals, actually learn how to communicate to investors. And my biggest thing is a lot of people don't know how to get a broker to work with you because they're pretty much the ones that control the market. If you guys don't realize this, guys, if you're not a broker or an agent, you're depending on somebody else to feed you. You either need to choose to feed yourself and create those opportunities and wins, or you can wait for it. Like I say, not wait for it. Learn how to take advantage of these opportunities now. And how to actually create and actually run comps. Now, guys, brokers will create what is called an offering memorandum, which is an OM. And what brokers do is they actually create like, this is their rental comps. This is what their sales comps say. But I can actually like run circles around most brokers because a lot of them don't even know how to do half the things that I can do. And I can always call the BS what they're telling you. And this is why so many investors right now in Arizona are losing their pants, basically, is because these brokers are one-sided transactions. They force these syndication groups into closing deals that they should have never bought. And the prices were so high that now people can't be able to keep the properties. Like, I don't want you guys being in that situation. So my biggest goal is I want to show you guys how to create the life you want to have. And it's so much faster through multifamily. So that's my presentation, guys. So I hope you guys got something out of it. Oh,
So
Jose.
thanks, Sophia. I really appreciate, everything that you've shared. There were a couple questions just about the terms that you would use when I was able to kind of fill in. But Tyler brought up a really interesting question. How do you know? How do you start researching? How do you start researching a new market? Like, in other words, if we're all sitting here in Arizona and Phoenix, and we know that things are getting tough, especially for a newbie. What would you offer as a suggestion as to how somebody might find a market that they could kind of start focusing on as opposed to starting here in Phoenix?
Oh, okay. So I teach that right in my essentials course, but the best way is to also get my training system, and then I definitely recommend like getting your license. If you get your license, you're going to get subscriptions that other people that are not licensed are not going to have. So it's going to give you the extra tools and resources to be able to like pull lists that you can't pull, like being unlicensed. Like, I've already started my mailing campaign out in Florida. I've already had a lot of success there. I've been doing my mail here for over 10 years. And for the past, like, I would say 11 months, like my mail, like all of a sudden stopped working. Like, that has never happened in my career because people want 21 pricing, but they were talking about 24% or 24 interest rates. So like, it's not matching up. So now we don't have a meeting of the minds with the sellers. And now we don't have a meeting of the minds with the buyers. So we're kind of like just not transacting. But I don't want to be stuck, right? So now I need to know, hey, I can create anything I want to have just in another market. So that's what I teach with learning apartments. And that is, like, I would say, like the easiest like investment that anybody can do for themselves.
Gotcha. And then, but if you wanted to look at a new market, so as an example, I know you have specific feelings on if I'm thinking, hey, you know what, maybe I'll go consider Oklahoma versus Iowa.
Oh, let's talk about Oklahoma. Okay, so commercial lenders red line properties, and what that means is commercial lenders do not have to lend in certain areas. And if you look at the demographics, you look at the average rents, like the market hasn't changed in over 10 years. I mean, we can still pick up units there for $25,000 to $40,000 a unit, but the rent hasn't grown from $350 to $375. Like, it doesn't make sense, right? Like,
Right.
And then also to those states that have like a lot of tornadoes, that's those type of like intense like weather conditions. The lenders don't like Kansas, for example, they don't want to lend like they want a 20-year AM. So your payment's so high and they want to be paid off so quickly. They don't want to be in that market, like they make it so difficult to get a deal done. Yeah, it's like cheap per door, but that doesn't mean you should be there. I always focus on location because location will always save you in anything that you do, in my personal opinion, with real estate.
Right. So you're looking for markets that have a bit of growth that aren't stagnant. So you're staying away from the Rust Belt, Midwest, if you will. You're looking for places like Florida, or like Arizona used to be, or Florida, where there's that growth and you can actually have that sort of built-in equity, if you will, right? When
Exactly.
you can buy
There's over 4,000 people moving there every single day,
yeah.
which is really incredible.
Well, good question. Real quick, someone's asking, when does this introductory offer end, the 197?
So like it's for tonight. Like I would just have people sign up tonight. We're launching, I believe it's within like a week or two. You will not have access to our pre-launch offer until we officially launch, which I believe is July 1st.
July 1st, okay. But as far as the 197 introductory offer, when if somebody's sitting on the fence, when do they need to get off the fence?
Well, it'll be a lot more. Yeah. So like right now they're getting 97% off
Okay.
for essentials. We'll obviously have like upgrades and stuff. But if somebody just wants to at least get a taste of like everything like I went through and actually really understand the foundation on how I actually got there,
Mm-hmm.
like I know I went over it very quickly,
Sure,
you know,
of course.
very quickly, but I just want people to at least have a chance to get started. And for me, like I feel like the best thing you can do is invest in yourself. Like I took 10 years off the learning curve, so it won't take you that long to get there. And honestly, no one's ever created anything like this before.
Right. And so do you think, but this offer will be available for what, another day, 2 days, through the weekend?
I
Where
think
are
through the
we?
probably definitely through the weekend, most likely.
Through the weekend.
Depends on
Okay.
when they actually run it through the system. Yeah. I don't know when they're exactly making the change.
Oh,
So
got you. Okay. So it's really
yeah,
kind of a crapshoot, right? You're going to roll the dice if you wait too long.
yeah, exactly. So my course is not on like a funnel, like a lot of them are, but
Mhm.
I'm with Bradley's Lightspeed, so it's an interactive training system. So like we actually will like question you, train you during the process of you going actually through this course. So that way you actually retain the information versus just like watching videos.
Right. So yeah, your course is set up a little bit different. It isn't live, but it isn't just reading modules online, right? There's a little bit of interactivity
Yeah,
associated with the
and we
course,
create a
right?
community.
Uh-huh.
And what's good is too, like if people sign up for our mastery program, like I start sharing like off market amazing opportunities. So people want to start partnering or investing, like they can start making the money now. What I see happens is these syndication groups, you know, like you're in 3 to 10 years. A lot of people can't wait that long. A lot of people are like, I need money now. Like I need to start making money now. I don't have like years to wait. And like the 2 to 100 unit range is the fastest way that you can start like growing very quickly, very,
Right.
very quickly. And you have 10 units yourself. So like, I'm sure that like, I know you were originally just looking at a duplex, but I think your first deal was a 10 unit, right?
Yeah, that's right. There's this story I wrote up somewhere, which is how I accidentally bought my first 10 unit property, because I was looking for a fourplex and I found the 10 unit and I was like, well, I underwrote it, didn't know anything and just kind of dove in on it. So, yeah, it's been going pretty well. So Sophia, I want to touch back on something. There was a question that came up and you talked about the, natural disasters associated with places like Oklahoma, where
Huh?
a lot of insurers are pulling out, and
Yes.
you're 100% correct that there are, because I've done some underwriting in Oklahoma and myself with partners, and finding insurance is a nightmare at times.
Oh, it is. And you don't
And
ever want to go to a state that where the tenants have more rights than you.
oh, absolutely, absolutely. So let me ask you this though, but what about Florida? Because I would just say that from a gossip perspective, I hear a lot about insurance companies are moving out of Florida where they're raising their
It
rent.
really just depends on what location it is.
Okay.
Fort Myers is like, I don't want to be on that side. I really
Okay.
focus more like in South Florida, like those highly desirable areas. And also too, like obviously we saw Miami, like Sunny Isles, like flooding just last week, like there's a lot of rainfall, but
Right.
like the insurance companies are not pulling out of Florida. Have the rates gone up? Yes, but so has Arizona. Like you said,
Right.
they've almost went up double.
Right. Yeah. They're up, I think, 40%, at least in the last
Yeah,
year or 2 years for sure, even on my
yeah,
property.
it's not
And
fair.
I
And
have no claims and they're just
I
going
mean,
up.
we have tumbleweeds and dirt.
Yeah, exactly. That's
It's
exactly
not
right.
fair.
That's right. I mean, the worst part is my grass isn't growing as well as it used to, so I think they're a little upset. But so Sophia, as somebody that wants to get into multifamily, what's the sort of? I know that I know in your course you talk a lot about finding those off-market deals. You talk a lot about creative financing, and somebody did ask the question though, how much money do I need to kind of have available if I wanted to buy multifamily? And I'm just going to assume right off the bat, we're talking about a threeplex or a fourplex. We're not talking about a
Yeah.
100 unit, clearly.
No, like to get started, I always recommend someone to be a owner occupied, whether you're living there or not, or making it living there, right?
Exactly.
The FHA is a little bit more strict about that. So that's 3.5% down. If you're military, it's 0. And then with conventional, it's as little as 5% to almost a 1.55 like loan limit, which is pretty dang good.
Right.
You can ask the seller to cover your closing costs. And if you guys are licensed and want to join our brokerage, like you can actually use your commission as part of your down payment. So you can almost come in with like almost $0 down. You literally can do that. And a lot of people don't realize they can.
Yeah. So that makes sense, right? Because if you're going to get a 3% commission on the sale, there's a new program that's been out, I think, for several months now, where you only have to put down 5% through, I think it's, I always forget if it's Fannie Mae or Freddie Mac. It's one or the other, but you can put down 5%, not jump through the FHA hoops, borrow. I think the purchase price is about, I think it's 1.65 million.
It's 1.55.
Is that what it is? Okay.
Yeah.
It's such a great deal. So right there, you're talking, you could buy $1 million fourplex for 2% down. You're talking $20,000. And if the seller covers the closing costs, if you're a realtor,
I'm not spending that much on a
hit that
fourplex
3%.
personally myself because like I want to make money.
Right.
I want something that's ugly, really ugly.
That's right. Especially if you're living in it, right? I mean, you want
Yeah.
something that's ugly that
If you're living in it, you want it decent because you want it to actually finance. But you know, just having it for a year can appreciate so much. So much if you buy in the right location.
Real quick regarding your, if I were to get, somebody asked this question, if they were to get licensed in Florida, what does that look like? Can they
It's so crazy. It's 63 hours. That's it.
And do they have to live there physically?
No,
Do they invest?
I live here.
Awesome. That's good to know, right? So you can really be licensed in any state. And does Florida and Arizona have reciprocal licensing?
Oh, that would be such a dream, but they did count my time as being a broker. So then I could be a broker there where I could just go straight to broker school. I didn't have to go to the sales associate school first.
Okay. And then if I wanted to get my license in Florida, is this kind of an online thing? Is there a preferred school?
Yeah, I like Larson.
Larson? Okay.
Larson, yeah. It's in Tallahassee.
Nice. Excellent. And is it online?
Huh?
Is it online? Something that
it is. I like it because it's video. So I did my course when I had no time. I started last May.
When you're on the treadmill at the gym, pretty much?
I did it on the treadmill in the gym. I did it when I was at Disney World when the baby was asleep on me. Like I did it with like no excuse. I did it when I was in the car. I didn't care. I just did it.
That's awesome. That's awesome. So anyone else, okay. So like, here's another question. What about if somebody was interested in investing or possibly purchasing a mobile home park? Would your course kind of help them out with that?
I don't focus on mobile home parks, but
it is a different animal. I will admit to that.
It's very, very different, but I have sold them before, and this will really help them identify how to be able to look up the same strategies through my course as well. Apartments and mobile home parks are similar, but are also hotels as well too. But then you can actually sell the business part of a hotel as well.
Got you.
Mm-hmm.
Okay.
But we're really, really, really highly focused on multifamily. Right now I'm selling like an investor, like a home with like an apartment complex that wants to put RVs and mobiles on like 10 acres, like out in Florida. Like you can buy stuff like that, like I like if you're going to buy RV and mobile home parks, I'm happy to be your broker on it, or just get your salesperson's license and then get the commercial tools that you're going to be able to need to get. But a lot of those deals like are not financeable. You're going to have to come in with just like a good amount down, or some of them are really flexible because these deals are not financeable with mobile home parks most of the time. Lenders don't want to lend on them unless they're like very large.
Right. And some of those deals, I know that some of your training focuses on, again, creative financing, seller carry.
Hard money.
Hard money. And those are strategies that you can use with mobile home parks for sure.
Yes. You just don't want to get stuck with the building. A mobile home park's a hard money note after 1 year.
Oh, you don't want to get stuck with a hard money note ever.
Yeah, exactly. So those can be tricky. So if you don't have another exit where you can't refinance, I wouldn't even get into the deal. Right.
So, well, excellent. Does anyone have any other questions that they might? Otherwise, I'm going to show you a couple more slides and wrap things up. What I'd like to do, so Sophia, really, I want to thank you. And again, let everybody know that this deal, per Sophia may be available through the weekend, but maybe not, because it doesn't seem like she's in control in a sense, or that
Lightspeed's launching my system. So
right. And it's going to happen whether when it's ready.
Yes.
what it sounds like. So, well, perfect. So what I wanted to do real quick was let everybody know about the next multifamily subgroup meeting. It'll be, again, won't be in July. It will be in August, the third Monday of the month. I'm pretty sure that's the 20th. I thought it was the 19th, maybe. I'll have to look that up real quick. It is the 19th. I don't know why I keep putting the 20th down. So, and that'll be from 6 to 8 p.m. We'll be doing a case study of an 80-unit apartment complex. Go to the
Nice.
Azreia calendar in order to do that. That'll be something that happens. And then as far as, again, if you'd like to get in touch with Sophia, this is an email for her. Follow her on Instagram. This is a QR link to her thing. And what I wanted to do was the last, very, very, very last thing, and I will do this right here, is in the chat, I'm going to put a link for the survey. So if you have any questions, you have any thoughts regarding the masterclass, what we've done, this sort of format, please let us know. Because if, again, Sophia's here, I'm here, really because you are here. And if people don't like what we're doing, then there's no point in doing it. But
Yeah, I agree with that, Jose. I think you do such a phenomenal job
thanks.
helping the students along. And another thing, keep in mind, guys, like I do a very different strategy. I'm very different, and I want to be different for a reason, because I want to take the person that has never been given an opportunity. Like, guys, I did it with like nothing. Like I took a risk, I took out a loan, I got my license, and I just, like, I had to be able to make it happen for my kids. You know, like I was able to get out of a very unhealthy marriage by having success, you know, like can get you out of like very uncomfortable situations and just pretty much change your life. And you literally can build your own empire. Like, don't let the big institutions and investors win, you know, like you guys can win. And I want to get you guys there a lot faster.
Yeah, absolutely. Absolutely. This has been great. Sophia, really appreciate everything that you've done. This will be the last chance if you guys have any last couple questions. Otherwise, I'm going to give you about 15 seconds to type quick. Otherwise, we're going to say thank you to Sophia. Thank you to Azreia for hosting this. And we really appreciate your time. So everybody go off and have a great weekend. And if you're on the fence, I think it's time to decide, because we don't know how long this offer is going to last. So
I appreciate you guys. You guys are the best. Thank you so much for coming to our class.
Okay.
Thank
Look
you,
forward to
Sophia.
meeting you all.
Awesome. Awesome. Thank you all so much. We appreciate it.
Thank you.